Hey guys, Dave with Moniology here. Hope everyone is having a wonderful weekend. Today is July 21st, 2019, and this is the Moniology Weekend Market Review, where we take a look at the market from various different perspectives to give us a better sense of what's taking place in the overall global equity and fixed income marketplace. So, starting with the 10-year US Treasury, and this is all from a daily perspective this week. So, the 10-year US Treasury yield right now is consolidating between 1.95 and about 2.2, and it still remains to be seen what happens here. There's some signs that it wants to break higher. On the other hand, there are some signs there's still some considerable weakness in this particular indicator. What we do see is that momentum wise, it's below the trend line right now. So until it breaks to the upside, the the evidence suggests that likely when this consolidation ends, that things do move lower. But it's very possible that we can retest this uptrend, this downtrend line over here, all the way back to 2.3 here. Here's the 10-year U.S. Treasury versus the 2-year Treasury, and what this does for me is it helps me understand what's actually taking place in the global economy in terms of inflation versus deflation. And so we had this rounded bottom here since basically July of 2018, where the 10-year was outperforming the 2-year. And a lot of folks were talking about an inversion of the yield curve and a possible recession. Well, this was showing me the opposite. And we finally broke out where the 10-year started firmly outperforming the 2-year and suggested to me that the markets wanted to move higher. However, what does this look like to you? This looks like an inverse a head and shoulders pattern. And notice the momentum considerably lower on every one of these new attempts higher. And so if this breaks the neckline to the downside, this is going to serve as a fake breakout and likely confirm a recession is indeed on its way. But we'll see. This could be just a breakout, back test, and then move higher on the 10 to 2-year Treasury. Here's the Dow Jones Wilshire 2500 Index. These are the top 2,500 stocks in the world right now. And notice we broke out to all-time highs over here at 7,400, and that would seem to be great, right? But every single time we tried to break this 69 level of RSI resistance momentum, we couldn't do it, right? And so this right here is, let me do this here. This is negative divergence. So you have higher highs in price, and you've got no new highs in momentum, and that's not what you want to see in new highs. So if this breaks lower below the 7,200 level, I think that the likelihood of a move down towards that 6,900 level and a retest of the 200 EMA is very, very much possible. Here's gold. Gold has been absolutely on a tear after breaking above this bullish flag of the cup and handle. We broke out. Now we've got the 50 and the 200 day moving averages serving as support. This was another bullish flag breakout here. Now we pulled back some on Friday, so we'll see. We might consolidate, but gold just looks like it wants to move higher. And while there might be some pullbacks along the way, I think the overwhelming amount of evidence suggests that gold is making a run towards that 1600 level sooner rather than later. Here's a high yield bond ETF junk, and look at momentum. It's declining, lower highs, lower lows, and it looks like it's right around here. It's testing that 50 RSI level, and if that breaks below it, I think we're moving lower to a test of the 107. I'd say 107.25, and possibly much lower. So this is one that you definitely want to watch to see how it operates. Because this is very much a leading indicator in terms of the health of the overall markets. I will say, here's more negative divergence. Notice this high over here versus this high versus this high, and as compared to the prices. So we got higher highs but lower lows, lower highs in momentum, and that's not what you want to see in a very healthy market. Here's the housing index. And housing index is in a bearish wedge consolidation, and it broke down over here. So that's something we want to take a look at. If this can't hold around the 316 level, notice we closed the week below the 50 RSI level. So we're still in an uptrend momentum wise. We broke above that level in June of this year, right around there, but we might very well pull back some, potentially again to the 200 week moving average or day moving average here at 297 in the housing index. Like crude oil, so crude oil looked like it wanted to move higher, but here again was slight negative divergence. Notice higher high in price, momentum did not make a higher high, and so that's a slight negative divergence. We pulled back some. Let's see what happens around that 55 level of support, which has been support here and here and here, and it also corresponds to that 38 level of RSI, which is where we've bounced in the past and found resistance in the past, right around here. So anyway, let's see what happens. I remain fairly confident that this may be a low here for the time being, but uh, I'm open to seeing a directional shift either up or down, and then making a decision based on price action. Here's the Nasdaq composite. Notice negative divergence. We made new highs in price, but we could not make new highs in momentum. We could not break above that 69 level. Now we broke down from the bearish wedge. It's very possible we break lower below 8100, and then we make a run test towards that 50-day moving average, possibly as low as the 200 day moving average before the pullback finds some strong support. Again, PPO has broken below zero, so there's quite a bit of evidence to suggest that stocks might be turning lower in the short term, in the near term. Nasdaq equal weighted, this one as well created higher highs, but momentum could not break above that 69 level, and so look at all these attempts over here, couldn't do it, and it looks like it wants to move lower right now. PPO broke below zero. Russell 2000 small cap hasn't done much. A lot, now you see the Nasdaq and the Wilshire, and you'll see the S&P and so on. They broke out to new highs. Russell hasn't done so, and so now it's consolidating right above that trend line. If that breaks, that's your sign that we're probably making a retest of the lows from June, certainly at 1460. So some nice potential downside ahead there in the small caps. All right. All right, so next here is the S&P equal weighted index, and here again a bearish flag, bearish wedge rather, broke down below it. Here's the uptrend that we broke above back in June, and now looks like we're breaking back below that right now. And so if we can't hold that 108 area, I think again we're going to be testing these various moving averages sooner rather than later. S&P large cap, SPX, that one's going to make a run towards that 50 level. We couldn't hold that 61 RSI level, which is very important. Broke down from the bearish wedge. 2950 is definitely in the cards. I think more likely is that 2924 level. And if we can't hold that, then 2823 is definitely another area of strong support. Semiconductors, and they've been doing quite well, but even amidst this rally here, we've created a bearish wedge, and we're not really making much newer highs here as we're coiling higher in a very defined pattern. This is where we broke down last, and this is where we're going to find resistance this time around. And I would not be surprised a pullback, a breakdown here all the way down towards that 1400 area in the not too distant future. Here's a total stock market ETF, VTI. This includes all the indices, including the US. And you see here, again, we couldn't break above that 69 level. And here we are breaking lower from the bearish wedge. PPO is curled below zero. So pullback is definitely coming right now. And it's a question of how hard and how fast. That remains to be seen. Transportation average, another good barometer on the economy. Look at this bearish trend line, and every time we've hit it, we've fallen backward, and so we haven't, just like the Russell, we haven't really done much here. We haven't hit new highs, but it doesn't look strong when you can't break above momentum, even as the other indices have done so. US dollar, this is one that we've been fairly accurate on over the last year or two, and I'm kind of mixed right now. This looks like it might want to break higher. On the other hand, if you look at it from a weekly perspective, there's quite a very strong case to suggest that it moves lower. So it's consolidating right now, and remains to be seen if it can break above that that trend line to the upside. Then that suggests we're going to make a move towards that 100 level. If we can't break above it and we roll back over towards below that 50 RSI level, then likely we head back lower below that 95 level. Here's the VIX, and the VIX, notice here's kind of a sideways cup and handle, but we created a bullish wedge here in the handle. We're starting to break out right here. Notice that, and notice that. So that's a breakout, and that suggests the volatility is going to rise in the near term. A nice target here is 21, possibly 20, 23, and 27, depending on how hard this move wants to move lower in the markets. Finally here, Wilshire 5000 composite. Well, there's one more chart, but Wilshire 5000, this is the 5,000 largest companies in the world, so it includes some of the small caps. And again, notice that 69 level has not been able to break. You've got the bearish wedge breakdown, and looks like we're getting set to break below that 30,600 level and to make a test for those moving averages. Finally, here's a world chart excluding the US. And although we bounced on Friday, so that's a positive sign off the 50 RSI level. We've done that before, but once we broke below this bearish wedge, and I don't see some any real technical catalyst, looking at the other charts to suggest that this is going to actually move to the upside. Yeah, it's possible we backtest this wedge from the downside, but ultimately I think we're probably going to move lower and retest that area here. Anyway, guys, I want to wish you all the best with your trading, and have a wonderful week. Take care.